Hi, everyone. Today's episode is a special two-parter. First, I'm joined by Lawrence Lepard, a longtime sound money advocate, gold investor, and the author of The Big Print. We talk about why he believes the current monetary system is headed toward a breaking point, why Bitcoin could be the fastest horse in a currency crisis, and how he sees gold, stocks, and the dollar fitting into that bigger picture. Then, in part two, filmmaker James Craig joins me to discuss his new documentary, Code is Law, which looks at some of crypto's most infamous hacks, from the DAO to indexed finance, KyberSwap, and Mako markets. We'll start with Lawrence, but first, a quick word from Binance. Binance is the world's #1 crypto exchange, trusted by over 290 million users. With industry-leading liquidity, security, and a wide range of digital asset products, Binance is the place to buy, sell, trade, and earn crypto. Download Binance today to get started. Welcome, Lawrence.
Hey, Laura, welcome. Nice to see you.
Yeah, I'm excited to chat with you. So for those in the audience who may not know you, you are an investment manager and at Equity Management Associates, and you're also the author of The Big Print.
I am sound money advocate for many, many years.
Yeah, so I really enjoyed reading your book. As I mentioned, you wrote this book called The Big Print, which was published earlier this year. And you recently went viral for a tweet in which you told gold proponent Alasdair Macleod, "You stupid fucking fossil,"
Yeah,
in response to comments that he made that Bitcoin is run by shysters, crooks, and Ponzi schemers. So before we get into the details around, all your views and everything, why don't you just tell people how you became interested in Bitcoin in the first place?
yeah, sure. By the way, that tweet, I kind of regret that tweet. He triggered me, but there's one thing I get triggered by. It's questioning my honor. And when he said we're all shysters and Ponzi schemers, and I've known Alistair for a long time, he's been a big gold guy. And I was just like, I'd had enough. It was just like, come on, man, wake up. I mean, you can say you don't like Bitcoin, that's fine, but this is a legitimate asset class, and he if anybody should know that. But I got into Bitcoin a long time ago. I came to it, as you know, and that's partly why I was so mad about a gold guy taking a shot at Bitcoiners as a gold and silver guy. Pre 2008. If you believed in sound money, as I have for 30 years, really your only choices were gold and silver, and I got into that through the Ron Paul movement and libertarian economics and Austrian economics, and I recognized that fiat system was broken many, many years ago. And so I expressed it, through gold, silver ownership, and gold, silver stock ownership. The white paper came out. I wasn't aware of it when it came out. I heard about it a little bit in '09 and '10. I was kind of skeptical because there had been other attempts to do digital currency, e-gold and hash cash, and there were other things, and they'd all failed. None of them, the Liberty Dollar, none of them had really worked. And so, when somebody said, "Well, there's this digital currency called Bitcoin," my initial reaction was, "Well, that's nice, but great idea, but it's not going to work." Of course, I was wrong, but I was generalizing from prior experience. When it got to be a couple of bucks, Max was trying to tell me to buy it, and I still didn't believe. When it hit $100, I was kind of like, maybe there's something going on here. I started paying attention. I was close to buying some through Mt. Gox, then they failed and I didn't. And I actually bought my first coins in 2013 when Coinbase came public. So I was paying around $300 a coin. And, since then, I obviously learned a lot about what it is and the design of it, the architecture of it, and the immutability of it. And my confidence level in it actually being a sounder form of money than gold just kind of grew progressively through the years as it continued to work and the problems got resolved. I mean, as we all know, there were some hard forks, there were block wars, there were potential security threats, etc. And every one of them got addressed. And of course, near the end, the biggest issue was, oh, the government's going to shut it down. Of course, and then they approved the ETF. So, we're now 16 years down the road, and I'm quite convinced that it is the future of money, and that we will all be, my grandkids will be paying for things measured in satoshis, not dollars. And gold and silver, while they're nice, they're inferior by comparison to Bitcoin. Although they are still sound money, and I respect people who don't want the volatility of Bitcoin decide to buy gold and silver. That's fine, but I get pretty angry when they call us shysters and Ponzi artists because that's just not what we're about.
Yeah, I find that usually people who do that are people who are financially privileged and don't know how financially privileged they are. And I found it interesting in your book where you talked about some personal experiences that your family had. And I realized, oh, this is why he was able to kind of understand the promise of Bitcoin early. So, can you tell those stories?
Sure. Well, there were a lot of them. The as I grew to understand Austrian economics, I mean, my grandfather had a business in Michigan in the 1920s that overexpanded using debt because the bubble of that led to the Great Depression was being blown, and the Federal Reserve blew that bubble, as we all know. And then when the Depression hit, he spent the next 10 years begging the bank not to foreclose on him, and it really scarred my grandmother. My father had the same business in 1979-80, and Volcker took interest rates at 20%, nearly put my father out of business. And I mean, 20% interest rates, really? And then in my case, I was an investor in the great financial crisis, and I had the Michael Burry trade on. I was short all the financial stocks, or I mean, all the housing stocks, because you could see the bubble that was created there. And so I was short a lot of the stocks that ultimately ended up failing. And as you may be aware, some people are aware, the government actually outlawed the short selling of financials on September 21 after Lehman failed. And so I was forced to cover all those short positions, which would have provided me with a very large profit. I covered them all at losses or small losses, and I spent the year down 6%. I should have been up 200%, and it's all because they changed the rules in the middle of the game. So and I think the point I try and make throughout the entire book is I just try to explain to people how this capitalism as we have it now isn't true capitalism, because the price of something very important, which is money, is being set by a committee of 12 people at the Federal Reserve. This is crony capitalism, and it's been set up to benefit the government, the bankers, the Keynesian economists, and the people who figure out how to game the system. And it makes me very angry that the average American has been gaslit into thinking that they're doing something wrong, or they're not working hard enough when they go to the grocery store and have a hard time buying groceries. When in fact, really, it's a very conscious strategy on the part of the government, the banks, rich people, and the people who control the Federal Reserve, to for them to benefit and for the rest of us to lose by paying higher prices. And we're not going to fix it until we return to a form of sound money. And the only way we're going to do that is to get a political movement, as big as the American Revolution or such, to really demand that we go back to sound money. And I think our best bet at doing that is for Bitcoin to overwhelm the system. I mean, gold and silver carried the ball for quite a time. I'm very happy to see Bitcoin come along because I think it's better, and I think it's harder for them to suppress. And I think that they're gonna lose basically. The current the broken Keynesian fiat system is, in my opinion, going to fail. The only issue is how quickly. And I kind of put it at the midpoint of probably 2032 or 3 or 4, somewhere in there. But we're headed that way quickly, in my opinion.
Yeah, I thought your book was very well argued. I mean, you go through a lot of history, and it's interesting because I feel like even if maybe I'd read it like a year or two ago, I might not have really understood it. But the more that I've experienced in my life, the more I am starting to see like all the things that you're talking about how a few people who have control um, design things in a way that benefits them staying in control. And
Exactly.
and this theme, yeah, like it's something that actually you see in many areas of life. It's not just around central banking or money. But one of the hypotheses you have in the book, which you sort of just alluded to, is that you think the U.S. is on the brink of some kind of currency crisis. You talk about this debt doom loop. Explain, your views on that.
Yeah, absolutely. I mean, I think it's very important for people to understand that this started a long time ago with the Federal Reserve. It got worse in 71 when we went off the gold standard, and it's really accelerated since 2008. Prior to that point in time, the Fed wasn't actively involved in printing money the way they do now. The balance sheet went from 800, billion to 3 plus trillion. And then the COVID example took them from that 3 up to 9. It's come back into the high sixes. Um, the debt doom loop is something that's important for people to understand. As long as the government continues to run large deficits, and they've kind of been normalized now, that leads to them having to sell debt to pay for those deficits. And that debt creates more interest costs that they then have to pay, which in turn then makes the deficit bigger. And so you can see that you've got a circular reference here where, more debt sold, more interest costs, more interest costs, more deficit, more deficit, more debt sold. And eventually it spins out of control to where, there won't be enough buyers for the debt. And so what they'll have to do is what they did in World War II, which is yield curve control, where the government is the buyer of the debt. And the government's already kind of the buyer of the debt because Secretary Bessent has been selling short-term debt to buy the longer term in order to keep the longer term interest rate suppressed. And again, it's just, it's peas and shells. The monetary plumbing is made complicated by them so that the average person can't see what's going on. But in my book, I tried to explain it in terms that the average person could understand. And really, the conclusion is that all roads lead to Rome, which is money printing. You know, and it's just mathematical. If they don't print the money, they can't service the existing debts, and the whole thing will collapse. What I believe we're in is what I call it the everything bubble. And when the everything bubble bursts, it's going to lead to a sovereign debt crisis. And the reason that is that Bernanke told us with his speech, way back when, his helicopter speech, that the deflation is death. But we have a technology called a printing press, and we can prevent deflation. And of course, they've demonstrated that and proven that. And so, this is a 1929 style bubble in terms of the valuation levels of stocks and a lot of things, housing, et cetera, all driven by cheap money and the monetary distortions of the last 20 years. And it should collapse, and it probably will get burst and start to collapse. But then the Fed will step in as they did in '08 and as they did in 2020, and just print like crazy. And, that's fine. It keeps the system running. But it's why, after the COVID example, they grew. It's no coincidence that money supply grew 40% in the COVID example, and our grocery costs went up 40% in the example. So you can print the money to keep the system going, but it's the same amount of groceries and goods and services, more money chasing them. Your prices are going to go up. It's pretty simple. So that's really what's going on. And sadly, it's getting worse, Laura. I mean, each one is happening more quickly, and each one is bigger. Bernanke printed 3 trillion over 3 or 4 years. Powell printed over 5 trillion over the course of 18 months, or maybe a tad longer, maybe 2 years. So, it's like childbirth contractions. They get more and more, intense and so forth. And so I think that the next big print, which the book alludes to, is going to have to take the balance sheet to 15 trillion or 20 trillion. And, it's going to unleash another wave of inflation. And it's interesting to me that with inflation really not tamed yet, we're still at 2.9 stated, and it's actually higher. Without it even tamed yet, Powell started cutting rates and made statements like they might start to trim the balance sheet runoff. And to me, that's all because the debt burden is bearing down on them. And they know that if they don't grow the money supply further, they're going to run into this deflationary collapse that they fear, and we all fear it. I mean, nobody wants a deflationary collapse at this stage. It would be so painful, it'd make the 1930s look tame and the solution to this inflation is to take interest rates up to a high enough level that people trust the currency again. And that's what Paul Volcker did in 1979 and 80 when he almost bankrupted my dad. But, back then you could do it because debt to GDP was 35%. And it didn't blow out the federal government deficit. Whereas today, debt to GDP is 124%. And so if we took rates up to some high rate, whole world would go bankrupt. So they've really painted themselves into a corner. And there's a way out. The way out is inflation, and the proper fix for the whole longer term problem. I mean, some accuse me of being a doomer, and I'm not. I'm a very optimistic person about the long term trend of humanity. I mean, look at the technology we're using right now. Look at all the great things going on. Look at AI. I mean, the world's going to get to be a much, much better place, but we have to solve this monetary problem. And until we do, inflation is going to be a persistent issue, in my opinion. So, we've got to address it. There's a chapter in the book that talks about how I would address it if I were president.
Yeah,
So,
yeah. Why don't you go into that? Because
well,
I was going to ask you, I saw
yeah,
in your book you said that you thought one of the ways out would be to embrace deflation, which
yes.
Yeah. So go ahead and talk
Well,
about
let's
the whole.
talk about that for a moment because it's
Oh, okay.
important. I mean, deflation is what happens when people and things get more efficient. Keynesian economics is what runs our system. Keynesians believe in unlimited growth, and growth is good. And just think about the math of growth of things on a resource limited planet doesn't work. I mean, you can't keep compound growth going forever if your resources are limited. So, what we really need is efficiency, and efficiency is doing things better, cheaper, faster, which is what these computers and technology have taught us. And notice how computers, TVs, phones, everything, it's all gotten cheaper and better over time, and that's good. And that could happen throughout the entire society with respect to everything as productivity improvements flow through to society. But because we've got a monetary system that's built on debt and built on credit and built on those things expanding, we've got these two systems that are in conflict with each other: a monetary system that needs constant growth and a financial system that's getting ever more efficient. And of course, what the monetary system is doing is it's allowing the people at the top to rake off all the benefits of that efficiency. And so it's all because the price of money is not correctly set. I mean, the classical economic theory, interest rates are the price of money, right? It's you borrow money if you think you can do something with it that'll give you a better return. And that interest rate price should be set at a level, in a free market way, at a level which balances the supply of savings against the demand for investment needs. So somebody has a project and they say, I want to do this thing. I think it'll give a 20% return and I can borrow from you at 5. I'm going to keep the 15. Well, that's an economic market transaction. But when you start messing around with what that interest rate is, you screw everything up and everyone starts making wrong calculations, and we don't get more efficient, we get less efficient. And so we should all be living much better lifestyles than we're living even now, even as good as they are. And the wealth should be much more evenly distributed because this system allows the people who are at the top, who know how to play the game of inflation, to steal from the rest of us because they can borrow cheaply. Like there's a story in the book about the Real Housewives of Wall Street. There's the wife of the chairman of Morgan Stanley in 2008. She borrowed $200 million non-recourse at a low interest rate to buy troubled assets, and the Federal Reserve backed her in doing that. I mean, if that's not corruption, I don't know what is. I mean, it's complete crony capitalism. And so, you and I can't borrow $200 million from the Federal Reserve at low interest rates. And certainly the average, working guy can't do that. So it's just a really badly broken and unfair system that needs badly to be reformed. And probably more than anything else, that's why I wrote the book. I mean, I looked at, the blue red debate, and I'm neither. I'm a libertarian. I believe, Ron Paul is the only politician I really like. The I looked at that debate and I said, you guys are all missing the really central issue, which is the money is just broken. The title of Lynn's book. I mean, it's just broken. And until we return to a sounder form of money, you're going to have bad economic outcomes. And that's what we're getting. These really unfair outcomes where poor people are getting killed by inflation. The rich are getting richer every single year, and the government gets more power and more control over our lives because inflation allows them to basically do what they want to do. And so it's a mess. I mean, really, the only way to
Yeah.
encapsulate it is a mess. Now, did I answer your question? Because I kind of rambled on a little bit there.
Well, I mean, you started about embracing deflation, and
Yeah,
actually, something that I wanted to say is this is so funny, but back in, I think it was like roughly 2008 or 2009, I learned about steady state economics. And I
yeah,
learned about that through a totally different political way, like a more leftist side, like through
sure,
environmentalism.
yeah.
And it feels like the same thing because you were talking about like we're on this resource constrained planet. So the notion that like, the economy could just grow and grow, it anyway, it's funny
It
because
doesn't.
it's
Yeah,
like the same ideas arrived at from totally different
it
angles.
doesn't work. Yeah, I mean, the way for human beings to enjoy better lives is to get more efficient. You know what I mean? To do things, engineering really more than anything else drives human prosperity. And, when you have the money pricing set incorrectly, as we do with the Federal Reserve running the show, the wrong things get funded. The government becomes too big and powerful. Just all kinds of the incentives just become all wrong. I mean, why do we pay, 18 cents a kilowatt hour here in the United States for power when or 14, I think is the average nationwide, when China has it for 5 cents? Well, because they're building nuclear power plants and they're thinking forward. And in the same time frame where they were building nuclear power and making their grid more efficient, we were wasting $8 trillion on wars in the Middle East. I mean, and that occurred because the government has a lot of power, and Dick Cheney and Halliburton and other people who profit from those wars were able to, gin up the notion that Saddam had, weapons of mass destruction, and off we went. And so, again, this is all just it's just these are all functions of the same core problem, which is the broken monetary incentives. And I think that one of the great hopes of Bitcoiners is that if we fix the money, a lot of these problems will go away because government won't be able to print the money to do the things that make no sense. and the,
Yeah.
and government does a lot of things that make no sense, right?
Yeah. So you wrote in your book that, because we were just talking about war, you wrote in your book that you feel like Bitcoin defunds war, which I thought was super interesting. I'd love to hear more about that. And just generally, you compare it to a number of other traditional investments, such as real estate, stocks, precious metals, et cetera. And, you talked about why you feel like it shines amongst that group. So I'd love to hear about those two
Yeah,
things.
well, let's go to the defunds war thing first. I mean, so think of what a country is. It's a group of people all living together under kind of a common set of beliefs and rules. In our case, the Constitution, theoretically. And war is one of the stupidest things human beings can do, right? It kills people, it destroys property, it wastes money on munitions, etc. It's just a bad idea. And if unless you're defending yourself against people who are trying to attack you, I get that. And if you look at the history of the United States, or the history of countries in general, wars are very, very expensive. And so if you go to the populace of a country and say, hey, let's run this war, and by the way, you got to send half your income into me, or two-thirds of your income into me to pay it, the population is going to go, no way, we're not doing that. We don't want to fund it. And so, but the government's figured out a workaround. It even started with the War of 1812 because they suspended specie payment, to fight that war, and the war before that, the Revolutionary War. We had a hyperinflation event because the currency that we printed, we printed to excess. And so it's the point I'm making is it's very hard. War's expensive. It's very hard to fund them, and it generally involves inflation is involved. And so, you know, Civil War, Lincoln issued greenbacks, huge inflation as a result of them, and they lost all their value. The Federal Reserve got founded in 1913, World War One, and we had 100% inflation coming out of that war. The price level between pre-war and post-World War One in the United States doubled, and you had all kinds of strife. You had, a rise in lynchings, a rise in labor unrest, etc. It was a very bad period of time. Inflation pulls at the strings of society. A lot of costs to do. We actually did it well in World War II. A lot of cost to run that war, and we printed the money and we grew the Federal Reserve balance sheet, and we put in yield curve control. And the reason it didn't result, and we had very high inflation. Most people don't know it. There were some months in the 1947, 48, 50 area where inflation was running 20% year on year. Okay, it was really bad, and bondholders just got totally annihilated. I mean, they had the yield curve control in place, and long-term bonds were paying 2.5, and short bonds were paying 3/8%. So they all got killed. But the point I'm making is that what got us out of that without that debt burden is that over time we had a much better demographic situation. We had the automobile, or we had growth in the country expanding in terms of both housing and the interstate highway system, and we grew out of that hole. But the reason to answer your question of why it defunds wars, because the average person, knowing what a war is going to cost them, would vote against it, and would push their congressmen and congresswomen to vote against it and stop it. Although many wars have been undeclared, they're supposed to be declared by the Congress, they're not. The point again is if the government doesn't have the money, they can't fight the war, and it's the money supply inflation that allows them to have the money. If the money were sound and they wanted to have a war, they couldn't afford it because the people wouldn't give them the money, and they wouldn't have the money to pay for it. And no soldier or nobody's going to build you ammunition or weapons if they're not getting paid for it. So I think that's how it defunds war. To address
Um,
your question of
and
Bitcoin
but
is
then, sorry, just to connect the
that's
last
okay.
dot, is the
Yeah,
last dot that the government has adopted Bitcoin as a currency, or what?
I think that's right. To get there, the government will have to adopt Bitcoin as a currency. I mean, my view is that currency and the government should be separated, very much like religion and the government. I mean, I think we need, my view, I'm a very classical economist, libertarian point of view, or classical liberalism actually was the original school of thought. We need a government, in my opinion, to build the roads and enforce, laws and justice. I mean, I want to see criminals and thieves put in jail just as much as the next guy. And, my estimation is that we could, if we all paid a 10% tax on everything we bought, flat tax, that would probably pay for those two functions. Everything else the government does, I don't think we need. And I really do think that as we grow as a species and we get more and more enlightened, the notion of countries fighting other countries, it's just not going to happen. I just don't think, I don't imagine the average Chinese peasant wants to kill Americans. I don't imagine the average American wants to kill Chinese people or Russians. I mean, most average people aren't psychopaths. People who are warmongers, in my opinion, are psychopaths. And so if we defund them, then we won't have wars, in my opinion. So I think it's a beautiful thing, and sound money makes it a lot harder for a government to figure out how to conduct a war. So that, in my
Yeah.
view, when we go to a Bitcoin standard, which I think we will, um, wars are going to be a much less common thing, if not extinct entirely. To your second question about Bitcoin versus the alternatives, so, basically, sound money is all about scarcity and stock to flow. I mean, Saifedean taught us this with his seminal book. And, there is no sounder money than Bitcoin. The supply is fixed, it's algorithmically set. It's currently, stock to flow is half that of gold. It's got 0.8% dilution here. Gold's 1.7. And every 4 years, that gets cut in half again. So, this is the soundest money that's ever existed. It solved a problem that's been with mankind for thousands of years. I mean, gold and silver, they were the soundest money. But even in the case of silver, when the Spanish found South America and they brought all that silver back from South America, it grew the money supply enormously, and there was super high inflation. So, here you've got, by creating digital scarcity, what Satoshi did was he gifted us with a form of money that is mathematically limited. And, I've been waiting a long time to say this. You know, that's why it's going up forever, Laura. It, it really is. I mean, it's a fixed supply, and as more and more demand emerges for it, the price will never stop going up. So, it's a really elegant and beautiful solution to a problem that all of humanity has. And, I wrote the book because I think that, I care about my kids, I care about my grandkids, I care about, average people in the country. I see a lot of people hurting, and I think that, and I see a lot of people being gaslit and arguing about things that, in my opinion, aren't nearly as important as this fundamental issue of sound money. And so that's why I've been such a loud advocate for sound money. And then, of course, I'm a self defender. When guys like Alistair trigger me, that just, I couldn't bear it. I mean, I am about as far away from a shyster as anybody can imagine, I think. And to be called that, I couldn't bear it.
Yeah. Well, I did. This is the perfect segue because I did want to ask about the fact that we're seeing gold, near these all-time highs.
Yeah.
And, there's this kind of moment where we're seeing like the US dollar is slowly devaluing. The, gold is just on this precipitous tear. Bitcoin, has been at all-time highs recently. It's kind of faltering now. But, when you look at this moment in time, how are you, how are you invested? Are you invested more in
Yeah,
Bitcoin,
sure.
more in gold?
Well, in terms of my personal, I mean, I have a house, but other than that, in terms of my personal savings, I'm much more heavily weighted to Bitcoin. I don't know,
And
when
why?
you ask,
Explain, like, why that's
well,
your
because I think it's the fastest horse in the race, and I think it ultimately will become money, and so, and I think it will demonetize gold, but it's not to say that gold is bad, because that demonetization process will take some years, arguably decades. And I come at it from a gold point of view, and I haven't sold any of my gold because I still believe in it. What's the weighting is, I think I'm about 70-30 now, Bitcoin gold. But that weighting is really, it's gotten there because the Bitcoin's gone up a lot, not because I've sold any gold. And so, um, the in terms of the two right now, Bitcoin is incredibly cheap versus gold. It's against the bottom trend line of the Bitcoin gold ratio, and it's about to launch. I mean, if somebody had a new dollar today to invest, I would strongly encourage them to put it into Bitcoin. And I've actually even been selling a few things that are somewhat related to gold stocks, and using those proceeds to buy Bitcoin related things like either Bitcoin or MicroStrategy, which I believe in. So they're both going up and to the right, but Bitcoin's going there more quickly because gold is fully distributed and Bitcoin's being adopted, and so that adoption curve, I mean, the gold market now is about 27 trillion, Bitcoin's about 2 trillion, total fiat assets according to Jesse Myers about 900 trillion. And I think Bitcoin will ultimately pass gold. And so to me, Bitcoin has got more alpha and more asymmetry than gold, but they both have merit. The thing that's useful about gold is for really old people who don't want big volatility or drawdowns. It'll protect you against debasement without, it won't go up as fast as Bitcoin, but it won't go down as fast either. So, and some people like that. This period, interestingly, Laura, kind of reminds me of the 2018, 1920 period. If you go back, I've got a chart on this. I'd be happy to share it actually if you want, but that shows that gold it's more widely distributed, more held by more people, and it tends to smell out the monetary debasement before Bitcoin does. And so Bitcoin tends to sit back for a while, gold moves first. And this big move in gold, in my view, is coming because Jerome Powell is out at the end of the year. The Doge program failed. Everybody knows they can't stop spending as much as they're spending. The big, beautiful bill got passed. We just bailed out Argentina for 20 billion. Oops, no, it's 40 billion, right? And and so, everyone can kind of see that it's Lynn's point, nothing is going to stop the train. And so, with that in mind, people are saying, hey, you know what? I need something to protect me against this money printing and inflation. And the easiest, obvious choice for most people, because they don't know about Bitcoin or understand Bitcoin, is to buy gold. And then what tends to happen is Bitcoin lags behind it a little bit, and then it just comes racing by it. And so I remember in the early 2019-20 period when the repo crisis hit, gold started going up quite a bit, smelling what was coming, and Bitcoin was on flatline. In 2020, COVID hit, and Powell came in with his big money printing operation. Gold took off like a rocket. Bitcoin flatlined for a while. About 2 or 3 months later, Bitcoin woke up and it went from 10 to 60. So it went up, gold went up 40%, Bitcoin went up 6x. It crushed gold, but there was a lag. And the chart I'm referring to shows that. It's on my Twitter feed. That chart shows that. And so I think, what we're looking at here is when Bitcoin wakes up on this next money print, which I think we're close to being at, I see Bitcoin, it's going to go to 2, 3, 400,000 sometime in the next 18 months. Probably on the sooner side of that. I mean, I expect 150 probably within 6 months. So,
Oh, wow. All right.
yeah. So
Well,
it's
people heard it here first.
yeah, it's coming. I mean, well, look, I've been wrong about a lot of things. So don't. I mean, I offer you my opinion and do with it what you will. I could be
Yeah.
dead ass wrong, but I have been. It is what I do, and it's what I wrote the book about. I have been watching this stuff for a long time. So, and it is my strongly held opinion.
Yeah. Yeah. Again, as we've said on the show plenty of times, nothing here is investment
It's
advice.
not investment advice. No.
Lawrence, we're a little bit past time, but I did want to see if you're available just for a last couple
I
questions.
can take as much time as you like. Sure.
Okay, great. So, as you mentioned earlier, you're a fan of strategy, formerly MicroStrategy. And as I'm sure you're very well aware, we're in this period where there was this trend with all these DATs, these digital asset treasuries. And
Yeah.
strategy is essentially the first DAT. It's very, very successful. I wondered what you thought of the category overall. Like, do you think any other DATs will be successful? Do you feel like only strategy could be successful?
That's a
Why
great.
is it
Yeah,
that
it's a
these
great
trade at
question. It's
a
a great
greater than
question.
1 mNAV?
Yeah, I'd like to weigh in on that. It's a great question. So first of all, I think they're a good thing. They're really like closed-end mutual fund holding companies buying Bitcoin, And because they're corporations, they're able to use some leverage in terms of either debt or preferred stock. And so, really, what they, in my mind, what they represent is a levered form of Bitcoin. They're kind of Bitcoin on steroids. And the question that I think the market is in the process of sorting out, is what do you pay for that leverage, and how much leverage should you have, and how good are these management teams? And so, we saw a lot of excitement as they all came out. We saw a lot of people thinking, okay, these guys can, issue stock at the market above the underlying price of their Bitcoin, and therefore they're catching a premium. They can put that into the Bitcoin, they can grow the MNAV per share, and that's a perpetual money machine. And while there's some truth to that, eventually that growth slows down, and the MNAV collapses closer to, or in some cases now, and some of them it's below, the Bitcoin that they hold. And I don't know what the right MNAV multiple is longer term. I mean, this is kind of like banks. Banks tend to sell at kind of 1.5 to 2 times book value. And the reason they do that is because they have assets and liabilities that they put to work, and they earn a spread on them. And it's kind of similar with Bitcoin treasury companies. And I'm guessing the Bitcoin treasury premium should be somewhere between 1.3 and 2 times MNAV, depending upon who's running it and how good a company is. I think Sailor right now is at 1.4. I could be wrong on that, but it's close enough. And they have merit. I mean, what he's done with the stretch product, I think is very interesting. I own it. Um, he's issuing a perpetual preferred stock. It's very well covered by the underlying value of the Bitcoin that the company holds. And he's committed to paying 10% on it. And the Bitcoin he owns, he believes will appreciate. Right now, the ARR is 38% a year, but he believes it'll be north of 30 for several more years, quite some time. And so he's really just earning his shareholders the spread, right? He pays out 10%. The value of the underlying asset grows by 30. Well, he's got a 20% spread, and that goes to a shareholder. So it's a logical strategy, and as long as he doesn't get too levered and suffer through an incredibly bad bear market. But even if, as we've seen, these bear markets generally don't last more than 4 years. And, I don't see how he really gets in any trouble or it doesn't work, unless we're just fundamentally wrong about Bitcoin. If the price of Bitcoin goes down and stays down, and all the adoption that we've seen somehow reverses, well, then obviously this isn't going to work, and it'll fail quicker than anything else because it's levered. In terms of how many of them there need to be, and I can see quite a few of them. I mean, there's an argument for different countries. I mean, Metaplanet took advantage of Japan. There's one now called Orange, which is taking advantage of Brazil. They're different categories. I mean, some use debt, some use preferred, etc. But, do I think they will all survive? No. Not all the management teams will be, prudent and smart and do the right thing. And some of them will probably get over levered. And so in a downswing, they might lose their access to capital and, have to sell coins to pay the dividend. I mean, there will be, look, my personal view, and I own some strategy. Okay. Not a lot. I mean, compared to my Bitcoin holding, but I own some because I think Michael's doing the right thing. And I do think it will outperform the underlying coins. But my personal view is this is an asset that is really performing better than any other asset in history and has an enormous IRR. Don't be stupid and try and lever it up. Don't be greedy. I mean, sit with a calculator and compound something at 30% a year for 5 years, 10 years, 20 years, 30 years. It gets nuts, right? And that's what Bitcoin is. I mean, it's a compounding machine, for the next 5 decades or more. And so, in light of that, why do you need to add leverage? I mean, I see these kids on Twitter and other places who talk about, well, yeah, I know it's going up higher, faster, and this 38% a year is not enough for me. I'm going to add some leverage, or I'm going to take all my Bitcoin, sell it, and buy Metaplanet. The Metaplanet's selling at an MNAV multiple of 7. And I'm kind of like, oh my God, you're not thinking about this correctly. Do you know what I mean? I mean, if you get, you don't need to be so greedy, and you don't need to lever yourself up with Bitcoin. Bitcoin is the best performing asset out there by far. Just holding it, just hodling it and forgetting about it is probably what 9 out of 10 investors should do. If you want to play the treasury, the Bitcoin treasury companies, fine, but just be aware of the risks you're taking.
All right. So, last question. You kind of
Sure.
answered parts of it already, but so far, we kind of have these like four major assets that we've been talking about throughout this episode,
Yeah.
Bitcoin, gold, the US dollar, and stocks, I think would be the other one. And you kind of talked about how you think Bitcoin is sort of poised for a breakout over the next like year or two. I just wondered if at the same time you could talk about how you think those other three assets,
Absolutely.
gold,
Well,
yeah,
look, I
how
think we're in a sovereign debt crisis. And so I think gold, Bitcoin, and silver are all going to do well to varying degrees. I think Bitcoin will probably lead. Silver actually right now will probably be number two because it's coming out of a long suppression period and it's been held below its peak of 50 for a number of years. I could see it going to 100, really easily. I think gold's going to continue to go up just because they're going to continue to debase the dollar and central banks are going to buy it. So stocks are a really tricky and interesting question, Laura. If you look at any historical metric, they're extremely overvalued. Market cap to GDP, PEs. I looked at recently. In fact, it's in my most recent quarterly letter. I think the Mag Seven stocks are selling at like a 40 something average. Multiple. I mean, that's nuts. That's so high, so extreme. Now, some of those businesses are monopolies. I get it, but that's pretty expensive. But I'm not here calling for a crash because with easy money and more money and credit being fed into the system, the stock market has kind of proven that it's an energizer bunny. But having said that, and if you look at cases of very high inflation and hyperinflation, stocks have to a degree protected you. I mean, look, the thing that we know is absolute death in high inflation environments are bonds, right? The notion that you're going to get 3% interest or 4% interest and get paid back your principal in 10 years, that's a bad deal. The principal is not, it is, it's just a terrible, or 30 years, 20 years, 30, it's ridiculous. You're just, yeah, you'll get paid back the principal, it just won't buy as much. So bonds are the big loser. Stocks, they represent the earnings power of businesses and if you look at stocks in hyperinflationary countries like Weimar Germany or Venezuela, they went up a great deal in nominal terms compared to the value of the currency. They didn't really gain that much. If you look at the last inflationary period of the 70s, stocks they flatlined. They didn't go down. Well, they had a dip in 73 4, but in general, throughout that 10-year period, they're kind of flat. Bonds got killed. And actually, the two best categories for stocks in the 70s were gold stocks and oil stocks, which kind of went up 30% a year compound annually. So stocks that aren't commodity related and that are very overvalued, I'm not a big fan, but I don't, but I get it. They've worked and people think they'll keep working and maybe they will. And, I don't know if you've heard the term crack up boom, which is when they just keep printing so much money that the value of everything goes up. I mean, it kind of feels a little bit that way to me. And so I wouldn't, let me say this. The last 5 years, I've lost a lot of money trying to short the stock market. And now I've stopped doing that, so they'll probably crash. You know, but it's just kind of like they're the Energizer Bunny. I mean, and uh, they just are. I do think I have to say though, honestly, if you ask me my gut feeling, I think we will have it because I see cracks in the system right now that remind me of 2007 and 8. These big bankruptcies. These auto related bankruptcies that have just happened. The first brands and the other one, Tricolor. This has a little bit of a housing bubble feel to it when the Bear Stearns funds failed, and you're starting to see the unemployment numbers just got revised downward very steeply, and you're just starting to see the economy cool off a little bit. And stocks right now they're priced for perfection, and so if we do have an economic downturn, it wouldn't surprise me at all to see a pretty severe correction in the stock market. I mean, I'll say this in terms of general stocks, which I've been exposed to throughout most of my career, I don't have any exposure right now. I mean, I have silver and gold stocks because those are related to the precious metals, which I think are going to go up a lot. And I own a couple of commodity related stocks, but general stocks, I'm not a big fan. But I can't, it's not the worst place to be. And they kind of fit with real estate, by the way. I mean, real estate, at least it's a real asset, right? They can't print real estate. But the thing I don't like about real estate is you can't move it and they can tax it. And, I think we probably had a little bit of a bubble there too. I mean, we built a lot of McMansions. I'm not sure who's going to buy them. You know, so we'll just have to see. I mean, for my savings, my three favorite buckets are gold, silver, and Bitcoin.
All right. Well, Lawrence, it's been such a pleasure chatting with you. For anybody who hasn't read his book, I recommend it. It's
Yeah.
yeah, yeah.
Let me
Let's
just,
show it on screen.
I'll just hold you up a copy of it there. So,
Yes, and it's
yeah,
orange, which is
yeah, it's orange. It's
beautiful.
on. It's available on Amazon. Hard copy, paperback, digital, and there's an audio version too. So, and I'm
Yes.
I'm working. Anyone want international is wondering about the translation. I'm working on all those. It takes time, but I'm working getting it out in Portuguese, German, Spanish, etc.
Oh, great.
Yeah.
Nice. All right. Well, Lawrence, it's been a pleasure. Thanks so much for coming on Unchained.
Oh, thank you, Laura. Very nice to talk to you. Take care.
Yeah. Binance is the world's #1 crypto exchange, trusted by over 290 million users globally. With world-class liquidity, security, and a wide portfolio of digital asset products, Binance makes crypto easy for everyone. Whether you're new to crypto or a professional, Binance offers a simple user experience. Learn with Binance Academy, browse hundreds of tokens, and track your portfolio on an easy-to-use dashboard. For experienced users, Binance Pro provides industry-leading services and bespoke trading products. With some of the lowest fees and deepest liquidity in the market, it's no wonder over 290 million users choose Binance for everything crypto. Buy, sell, trade, earn, live crypto. Download Binance today and begin your journey into the future of finance. Disclaimer: Binance is not available in certain countries, including the US. Check its terms for more information. Binance.com/en/terms. My guest is James Craig, founder, director, and producer at Encrypted Films, and he's here to talk about his new movie, Code is Law. Welcome, James.
Yeah, thanks a lot for having me, Laura. It's great to be here.
Yeah, so you just released your new film, Code is Law, and it was great. It was pretty riveting. And it's interesting because even though I was very familiar with at least one of the stories, I just found myself on the edge of my seat. So just tell me, about the film, how you came to do it, how you got the idea, and, what all is in there.
Yeah, sure. Yeah, so I'll give you a quick rundown of what the film's about. So it's a feature length documentary. It's really about the smart contract exploits that have shaped the code is law philosophy. So right from the way it was when it was first a meme to what it is now, essentially a courtroom defense. So it takes you inside some of the really well known smart contract exploits like the DAO, Index Finance, KyberSwap, Mango Markets. And it tells you the story of the developers, the investigators, and the victims that are at the heart of those cases. And then at the center of the film is this teenage hacker, Andy Mujenovic, who was responsible for $65 million worth of hacks and has been on the run from the FBI now for a while. So we
And
and yes, sir.
oh, go ahead.
No, I was just yeah. In terms of how we came to the story, so we me and my co-director Louis Giles. There's two directors on this project, Louis as well, who's not here. And we came across we were looking for stories to make independently, and he was at ETC a couple of years ago and spoke to the founder of Euler Finance, Michael Bentley, just after they'd been hacked. They'd been hacked for I think $200 million, and Louis mentioned the story, and we were both amazed by the fact that kind of nobody in the mainstream press even knew about this. The numbers are insane. And then I went on to Rect and saw the list of DeFi hacks with all these crazy figures and numbers, and I was like, wow, we have to make a story about this. So that's how we got interested. And then through the work of people like yourself, we came to understand what the DAO hack was and kind of understand about the code is law idea, and that's really the genesis of where the whole thing came from.
And was there any particular message that you wanted to get across with the movie?
No, I think actually the opposite in a sense that we really wanted to try and not make it a kind of polemical film that was strongly putting forward one view or another. I think like I had a massive amount of sympathy and understanding for the people that were at the heart of the story. So the founders who had actually been through these hacks and been at the center of things while kind of millions of dollars of people's money were being threat. I had a lot of sympathy for those people, but I didn't want the film to kind of be a coders law or an anti-coders law film. We wanted to try and walk the line of kind of just bringing forward the debate without taking a strong stance either way.
Interesting. Yeah, I mean, I get that, also as somebody who does this type of thing as well. But yeah, through watching it, my feeling was it's titled Code is Law, but the message is that it's not law. That's my
Yeah,
personal takeaway.
yeah, I think the fact that, I mean, I would have loved if we could have got one of the hackers to actually be in the film, giving the opposite point of view. It's actually surprisingly hard, as you probably know yourself, to find people who put forward the opposite point of view. And I think that's slightly changed over the course of making the movie. So I've started work on this maybe 2.5 years ago, and at that point, it seemed to be the complete consensus that like this idea is just a meme that was kind of quite prominent some years back, but now as the industry has progressed and matured, it's kind of been put into the past. But I think, especially with the Eisenberg case and what's happened around that, there's more of a sense that actually maybe the idea holds water and has some relevance to real life now. So I think, it may be easier nowadays actually to find people willing to put forward the opposite view.
Yeah, and you're talking about the Avi Eisenberg case, Mango Markets, where he manipulated or allegedly manipulated the price of a token to do like an economic exploit. Well, so as you mentioned, you go in depth on a few major hacks: the DAO, index finance, KyberSwap, and Euler. How did you choose these? Like, why did they make the cut out of many that you could have chosen from?
Totally. So the really, I think the process started mainly with index finance, because when I when we came across that story and there was this hacker that had very publicly kind of made the case for Coder's law. So Majedovic was one of the few who had been actually publicly identified and had stated, not in as many words, but had kind of said, what I did was within the rules of the smart contract. I should be allowed to keep the assets that I've stolen. That was the start of it. But then as we started to look into cases to bring out, and we started to research this Coder's law idea and understand better where it came from, that's when we started really delving into the DAO, and we kind of felt like, okay, to explain to viewers where this idea actually came from and tell the whole story so that viewers really understand, we need to tell that story as well. And then it was while we were making the film then, so like I said, we started shooting kind of late in 2023. About 3 months into filming was when the KyberSwap hack happened. So we didn't initially know for certain that it was Majedovic that hacked KyberSwap. We kind of, there were suspicions at the outset, and there were people that telling us that it could well be him. But it wasn't until we were further down the line that we were like, okay, we definitely have to tell this story as well, because it seems like he definitely hacked KyberSwap as well.
Yeah, and actually, before you go on with that, so just to explain a little bit more about who Indian Majedovic is, and yeah.
Yeah. So Andian Majedovic is a kid who hacked Index Finance back in 2021. So he was 18 years old at the time, and it was an exploit that resulted in about $16 million worth of assets being taken. Like I say, he actually doxed himself. So the Index Finance team did an investigation, managed to unearth who he was, identified him publicly. So he justified what he did. He kind of started the process of trying to legally defend himself, but then disappeared, went on the run from justice, as this is back at the end of 2021.
Yeah,
And then,
and by the way, that bit about how they identified him was kind of hilarious in my opinion. He had used a very specific username that they tracked down to a Wikipedia page, and then that username had only made one edit or something, and it was to add himself as one of the notable graduates of a high school, and he like named himself like, what was it, notable mathematician or something like that.
that's exactly right. Yeah, it was the notable alumni of this high school trivia contest called Reach for the Top. So it was pure kind of ego silliness that ended up in him getting caught. It is kind of hilarious. And so he was publicly known, but then he'd been on the run for a couple of years. He actually lost that money, so he hacked Index Finance. He had $16 million. Then he used the profanity tool. It's a tool that you can use to change for a vanity wallet address. So he used it to have a specified wallet address. Because he used that tool, there was a flaw in that. There was a vulnerability in that tool. So he ended up losing all the money he'd hacked from Index Finance. So he lost the money, and then a couple of years after this, while he was on the run, he then did another much larger hack, 3 times as big, from KyberSwap. So stole $48 million. He's admitted to the indexed hack. He's never admitted to the KyberSwap hack, but he was charged for both back in February of this year by the FBI.
And so, yeah, explain kind of the status of that case, or both those cases.
Yeah. As of now, he is still. So the FBI charged him in February. So he's wanted by the FBI in connection with those cases. There's several charges outstanding against him, but they haven't arrested him yet. So either they don't know where he is. He may be in a country where has no extradition agreement with the US, or they just may simply not know where he is. So as it stands, he's been on the run now for 4 years from some civil charges in Canada, which he initially faced in relation to the Index Finance case, and for over 8 months from the FBI in relation to federal charges for both cases.
Yeah, and I found it interesting. you all, or I don't know who it was. I guess maybe the hacker team went and, or somebody went, or not the hacker team. Sorry, the Index Finance team went and talked to his parents, and they discovered at the family home that he had left. But the parents, they seemed kind of okay with that.
Not loads and loads is known about what the parents. I think that, as far as I know, his mum hasn't ever spoken up, but his dad, there is a little bit of in the case files related to the civil case. There were some details of a voicemail that was left by the dad, by Andy Ian's dad, for the Index Finance legal team, and I think the phrase he used was that there was a hole in the contract that he'd been used. So the dad, essentially, in as many words, made the code as law defense for his son when the Index Finance legal team contacted him to try and resolve the case. And yeah, as you say, when the court actually dispatched officers to Andy Ian's parents' house to try and either arrest him or recover his devices so that they could try and recover the assets, Andy Ian had been on the run, and he's been on the run ever since.
So, as you mentioned earlier, also, it starts with the DAO, which is a hack that I'm very familiar with. I honestly, the movie for me was a little bit of a nostalgia tour because I know Griff and Lefteris and Christoph and all those guys affiliated with the DAO hack, or not affiliated, I should say, who lived through the DAO hack. I know them quite well. Talk a little bit about that particular hack and why you chose to start with that one.
Yeah, I think the DAO hack was so fascinating because, not just because of how new everything was at that stage, and how. So what was really interesting talking to those guys compared to a lot of the people in DeFi that I spoke to was just how kind of idealistic they were. They had this amazing kind of belief in the technology and in Ethereum, and I think the DAO hack was such an interesting story because it was a kind of distortion, a perversion of that whole idea. So it was this beautiful moment with this fundraise where they, I think at the time it was the record fundraise, the record crowdfund of all time. They raised $160 million, was it, for investment in the DAO. And then there's this terrible hack that happens, and then what it reveals is that there's this paradox at the heart of the technology, which is that you would expect maybe the community members, the investors who lost money when a huge amount of money has been taken by this hacker, for there to be this kind of universal, well, we need to get it back. What the hacker's done is wrong. But that's not what happened at all. Is that there's this huge schism in this community, with actually many people saying, well, no, it shouldn't even be called a hack. It's just a feature of the code. This person just used the code as it was written. This is really what this technology means. This is the whole ethos behind this technology, is that we shouldn't be calling this person a hacker. So I think that was the kind of moment. I know that the code as law didn't originate in that moment, but it was the first moment where it kind of came into conflict with the reality of like what it actually means when a hack happens. That there's these two competing voices that really can't be resolved, that are right at the heart of the kind of philosophy of crypto.
Yeah, I mean, that story was also fascinating to me because you ended that portion in the film, and then we move on to these other hacks. And what was interesting was then I realized, oh, actually, what happens, years later is people are still calling Lefteris and asking him for help when they get hacked. So talk a little bit about that. Like, why do you think that's happening? Like, how does he feel about it?
Yeah, actually, Lefteris was one of the really key parts in tying this all together. I think because that was one of the real challenges in the movie, was especially for viewers who aren't familiar with crypto, was explaining the link between these cases. And I think the one of my favorite bits from it, and one of the favorite lines we got while we were filming, was when Lefteris talks about how it was like a ghost of the past re-emerging when he was investigating the Index Finance hack, because he thought this idea that was dead and buried, this idea of code as law, which it was a huge part of his life. I think it was trying to take this down and fight against this idea when the DAO hack had happened. And then when the Index hack had happened, and Lawrence Day, who's the one of the members of the Index Finance team, who's very prominent in the film, had asked Lefteris to get involved. Like Lefteris says in the film, it was a huge personal thing for him to try and defeat this ghost from the past that had come up again. So yeah, I think that's. I don't know whether the Lefteris is still pulled into forums as much as he was at the time, but I know that in that case, like I say, he was determined to help and do whatever he could, because he wanted to fight against the voices in the community that were saying that it's justified.
Yeah. Something else that was interesting was, so Andy Majetovich had not only like been in contact with the Index Finance team, but he actually seemed to be like a contractor for them. And then, at least in my book, when I uncovered who I believe was the DAO hacker, Toby Honish, he had also reached out to the Slockit group. So why do you think it is that these are people who actually have had personal contact with these groups that they end up, whose smart contracts they end up hacking?
Yeah, I've thought a lot about this as regards Andean, because I think there's two possibilities that kind of fit with his character. I think one of the possibilities, I think, is simply that that he'd spotted that there was a potential vulnerability, or he believed that there was a way in which he could exploit index finance, and that he was in contact with the team as a way of trying to kind of test the theory. He was trying to have a closer look at the code. He was trying to kind of see if there were other backdoors that he could use to basically improve his chances of successfully exploiting the protocol. I think that's one of the reasons it may have been. I think another possibility, given what we know about Andean's character, is that it may have been slightly more perverse than that. It may have been more of a power thing and a control thing, a bit of getting close to the people that he knew that he was about to defeat in this digital battle, which I think is really how he sees it. Because I mean, this is the thing with Andean, is that he could well have done this hack and made a good attempt to just disappear just like a phantom, as Lawrence puts it in the film, which most other DeFi hackers do. But I don't think that's how he's built. I think that he wants the spotlight when he does one of these hacks, in spite of the fact that it's cost him an awful lot at this stage. And it's the same with what we see with the KyberSwap hack, is that he definitely, with that one, he'd given himself away with the index finance hack because of this Wikipedia entry that you spoke about. But with the KyberSwap hack, he definitely could have. I mean, there was no reason for anybody to know that it was Andean that had done this second hack, but he left breadcrumbs, just as he did with the index finance one.
Yeah. Help me if I am misremembering it, but essentially what he did was he left an address that was the same address, in relation to the KyberSwap hack. He left an address that was the same address that he had used to request payment as a contractor for indexed finance.
So this is so that was so basically what he'd done with the we're getting the two parts mixed up there slightly. With the KyberSwap one, what he'd done is that he'd hacked the KyberSwap, and money had landed in this wallet that was a different wallet, completely not associated with the index finance hack in any way. And then he decided to send $2 million worth of assets from the wallet that contained the stolen KyberSwap funds over to one of the wallets that had been used to steal funds from the index finance protocol. So essentially, he made this public signal that it could be the same person. And I think the thing was, at the time when this happened, my reaction was, it can't possibly be him. It must be somebody trying to frame him and make it seem as if it's him, because nobody could be that arrogant to be sending out a message that he'd done this huge, essentially a very serious federal crime. But he was publicly putting it in the spotlight. I think he wanted the acknowledgement from the community that he'd done it.
Wow. Well, so, now you have this movie out there. First of all, tell people where they can see it.
Yeah, sure. Yeah, so it's on Amazon, Apple, YouTube, and Vimeo. So it's only in selected territories, and including the United States, on Amazon. But anybody in the world can watch it through Vimeo on demand, and lots of countries. I think around 70 countries can watch it on Apple TV as well.
Great. And are you working on anything else yet? Maybe it's too early, or do you have your eye
Yeah,
on anything?
it's we do I do I do. It's still early days, but I'm there's several projects that I'm working on at the moment. I'm looking into. I've got a ongoing film I'm developing about North Korean IT workers that I'm working on, and I'm also doing some work on the case of the three teenagers who did the heist last year, where they stole $250 million worth of Bitcoin. It's one of I think the largest theft from a single person. So there's a couple of stories that I'm working on at the moment.
Okay, great. Well, it's been such a pleasure learning about you and your film, and everybody should go see this because it's riveting. And if you're into crypto, you'll find it fascinating. So thank you so much, James.
Thank you, Laura. Thank you for your time.
Welcome to this week's news recap. Let's begin. Trump pardons former Binance CEO Changpeng Zhao. President Donald Trump has granted a full pardon to Changpeng CZ Zhao, the founder and former CEO of Binance. The pardon follows months of lobbying efforts and continues a major policy shift toward digital assets under the Trump administration. White House Press Secretary Caroline Leavitt said Trump exercised his constitutional authority to end what she called the Biden administration's, quote, war on cryptocurrency. She added, quote, the Biden administration's war on crypto is over. Zhao, who served 4 months in prison after pleading guilty in 2023 to anti-money laundering violations, thanked Trump on X, writing that he would, quote, help make America the capital of crypto. The decision could clear the path for Binance's return to the U.S. market, though regulatory monitorships remain in place. Polymarket targets $15 billion valuation as prediction market. Boom heats up. Prediction market leaders Polymarket and Kalshi are seeing investor enthusiasm soar as both startups race to dominate a fast-emerging financial frontier where gambling meets traditional markets. According to Bloomberg, Polymarket is in early talks to raise funds at a valuation between $12 billion and $15 billion, a tenfold jump since June, when Peter Thiel's Founders Fund led a $200 million round valuing the firm at $1 billion. Earlier this month, the Intercontinental Exchange, ICE, parent company of the New York Stock Exchange, said it would invest up to $2 billion in Polymarket at an $8 billion valuation, a move that made CEO Shane Copland the youngest self-made billionaire. Meanwhile, Kalshi is fielding offers valuing it at over $10 billion, just weeks after securing $300 million in a round co-led by Andreessen Horowitz and Sequoia Capital. Both platforms have seen record activity, with combined weekly trading volumes exceeding $2 billion in mid-October, surpassing their previous peak during last year's U.S. presidential election. The two competitors also struck major commercial deals this week, with Polymarket becoming a clearinghouse for DraftKings and securing a multi-year partnership with the National Hockey League, which also signed a similar agreement with Kalshi, marking the first major U.S. sports league to collaborate with prediction markets. Despite the momentum, regulatory challenges loom. The Commodity Futures Trading Commission, CFTC, has allowed limited expansion of Kalshi's markets, but state gaming regulators have pushed back in court, raising unresolved questions about market manipulation and insider trading. Crypto CEOs meet U.S. senators to revive stalled market structure bill. Top crypto executives, including Coinbase CEO Brian Armstrong, Chainlink's Sergey Nazarov, Kraken co-CEO David Ripley, and Uniswap founder Hayden Adams, met with U.S. senators from both parties on Wednesday to push forward long-delayed crypto market structure legislation. The group first met with Senate Democrats, led by Senator Kirsten Gillibrand, to discuss how to reconcile policy gaps on issues such as decentralized finance and illicit finance. Nazarov said more than 10 Democratic lawmakers attended and that there was, quote, sufficient support to keep the bipartisan bill alive. The meeting was briefly joined by Senate Majority Leader Chuck Schumer. A second meeting with Republican lawmakers, including Senate Banking Chair Tim Scott, reaffirmed GOP backing for the bill, which aims to define how digital assets are classified and regulated. Scott's office urged Democrats to, quote, return to the negotiating table, end quote, to finalize language ahead of markup. Armstrong later posted that the industry is, quote, keeping the pressure on in D.C., end quote, to advance the legislation to President Trump's desk. Lawsuit alleges Meteora founder orchestrated Libra and Melania meme coin scams. A newly amended class action lawsuit accuses Benjamin Chao, co-founder of Solana-based dApp Meteora, of engineering a network of fraudulent meme coin launches, including the high-profile Libra and Melania tokens promoted by Argentine President Javier Milei and First Lady Melania Trump. The case, Herlock versus Kelsier Ventures, claims Chao led a team that created at least 15 tokens through a coordinated scheme involving Kelsier Ventures, headed by Hayden Davis, and Meteora collaborator Eungming Yao. According to the complaint, the group, quote, borrowed credibility, end quote, from public figures to legitimize what plaintiffs call a, quote, coordinated liquidity trap. The filing emphasizes that Milei and Trump were not responsible for the alleged fraud, serving only as, quote, window dressing, end quote, for Chao's operation. Both the Libra and Melania coins surged before collapsing shortly after launch, wiping out millions in investor funds. Chao resigned from Meteora in February, denying on X that he or the firm profited from the projects. Coincidentally, Meteora had its token generation event on Thursday, launching at a $650 million fully diluted valuation. Aave DAO considers $50 million annual token buyback program. The decentralized lending protocol, Aave, is considering a major new initiative to make its token buybacks a permanent fixture of its economic model. The proposal, introduced by the Aave-chan Initiative, ACI, a governance group led by Mark Zeller, seeks to allocate $50 million annually from Aave's protocol revenue toward repurchasing its native AAVE tokens. According to the plan, the Aave Finance Committee, AFC, and Token Logic would jointly execute weekly buybacks ranging from $250,000 to $1.75 million, with flexibility to adjust based on liquidity, market conditions, and available revenue. The initiative builds on Aave's previous buyback program, which the ACI described as a, quote, strong success, and aims to reinforce the protocol's long-term framework known as Avenomics. With approximately $169 million in annual revenue, Aave is among DeFi's most profitable projects. The protocol recently surpassed $25 billion in outstanding loans, expanded into real-world asset lending via its Horizon platform, and launched its first non-EVM deployment on Aptos. Aave currently ranks second among DeFi protocols in monthly fee generation, according to data from The Block. Coinbase acquires Echo, an up-only NFT, in $375 million deal. Coinbase has announced a $375 million cash and stock acquisition of Echo, a crypto fundraising platform founded by trader Jordan Kobe Fish, along with Kobe's up-only NFT, signaling the exchange's expansion into on-chain capital markets and crypto media. Echo's platform enables both private and public token sales through its Sonar product and has facilitated over $200 million in funding for crypto startups since its 2023 launch. Coinbase said the acquisition will make capital raising more transparent and accessible, with plans to extend support to tokenized securities and real-world assets in the future. As part of the transaction, Coinbase paid $25 million in USDC for the up-only NFT, which contractually requires Kobe and co-host Brian Ledger Krogsgaard to produce 8 new episodes of their talk show. CEO Brian Armstrong confirmed the purchase on X, writing, quote, just burnt the NFT, your move. Ethereum insiders criticize Foundation. Overpay, leadership, and favoritism. A wave of public criticism has yet again erupted against the Ethereum Foundation, EF, after former Geth lead developer Peter Szilagyi released a year-old letter accusing the organization of poor compensation, favoritism, and over-reliance on founder Vitalik Buterin's influence. Szilagyi revealed he earned roughly $625,000 over 6 years, saying that the foundation's pay structure pushed key developers to seek income elsewhere. Quote, Ethereum's direction always boiled down to your relationship with Vitalik, he wrote, claiming that most major projects are steered by a small group of insiders backed by a handful of venture firms. His comments sparked widespread debate across the Ethereum community. Polygon CEO Sandeep Nailwal said the letter made him, quote, start questioning his loyalty to Ethereum, citing a lack of support from the foundation. China halts tech giants' stablecoin ambitions amid regulatory pushback. Major Chinese technology firms have suspended their stablecoin initiatives in Hong Kong after receiving guidance from Beijing regulators. According to the Financial Times, officials from the People's Bank of China and the Cyberspace Administration of China instructed companies, including Ant Group and JD.com, to halt participation in Hong Kong's pilot program for digital currencies. The decision reflects growing unease in Beijing over privately issued currencies, which some officials view as competing with China's digital yuan, ECNY project. Quote, the real regulatory concern is who has the ultimate right of coinage, the central bank or private companies, one source told the paper. The Hong Kong Monetary Authority had opened stablecoin licensing earlier this year, positioning the city as a testing ground for tokenized finance. However, former PBOC Governor Zhou Xiaochuan warned in August that stablecoins could fuel speculation and financial instability, prompting regulators to take a more cautious approach. MegaETH confirms MiCA-compliant token sale and reveals novel sequencer design. Ethereum scaling platform MegaETH has confirmed the authenticity of a leaked MiCA format whitepaper, revealing plans for a regulated public sale of its Mega token and outlining new technical features. The sale, starting October 27th on Coinbase-owned Sonar, will auction 5% of total supply, about 500 million tokens, through a 3-day English auction that begins at a $1 million valuation and caps near $999 million. According to founding contributor Namik Muduroglu, the project chose this model to attract, quote, participants who show conviction, end quote, rather than rely on airdrops. The MiCA approval allows EU investors to participate, but requires KYC verification and licensed custody via OKCoin Europe. MegaETH's white paper also introduces a rotating sequencer system and proximity markets, which link token staking to network access for low-latency trading. The document allocates 9.5% of tokens to the team, 14.7% to investors, and more than half towards staking rewards aimed at building long-term on-chain activity. Last Friday, MegaETH repurchased 4.75% of its equity and token warrants from early backers who were exiting before its token launch, signaling confidence ahead of its upcoming mainnet debut. Unchained is produced by Laura Shin, with help from Juan Aranovich, Margaret Curia, and Pam Majumdar. The weekly recap was written by Juan Aranovich and edited by Stephen Ehrlich. Thanks for listening.